Hey there, I'm Spencer Ford, a certified financial planner professional and CEO of Conservative Financial Solutions. We created the Money Minute to help give you insights on how you can better your financial life in 5 minutes or less. Because oftentimes, a better financial life means a better, freer, happier life overall. And that is what we want for you and your family. So let's get into it. Is it time to consider an adjustable rate mortgage? Conventional wisdom over the last decade has been to go with the fixed interest rate mortgage because interest rates had been historically low. In fact, in January of 2021, fixed interest rates for a 30-year mortgage was 2.65%. That's insane. But what's even more insane is that the average for a 30-year fixed loan in 2023 was 6.33%. So that's an increase of 139%. So to put that in perspective, if you had a loan for $300,000, that's the difference between paying $1,200 a month and almost $1,900 a month. So it's a difference of almost $8,000 a year in payments just because the interest rate has changed. So an adjustable rate mortgage, often abbreviated as an ARM, ARM, is different from a fixed interest rate mortgage in the way that you might expect. So instead of your interest rate being locked over the life of the loan, that 30-year period, the way an ARM works is you have an interest rate for a shorter period of time, then that's subject to change later on. So one of the most common adjustable rate mortgages is a 5-1 ARM. The interest rate is locked in for 5 years. That's what the first 5 stands for. And then after that 5-year period, the rate renews each year. That's what the 1 stands for. Another common ARM is a 5-6 ARM. So it's locked in for 5 years, and then it's going to adjust every 6 months after that. So the benefit of an ARM is normally you can get a lower initial interest rate than you could on your normal 30-year fixed mortgage, for example. So in February of 2023, the interest rate on a 30-year fixed mortgage was 6.56%. The interest rate on a 5-1 ARM was 5.44%. That's a difference of 1.12%, or on that $300,000 mortgage, it's going to save you $2,500 a year in payments. Now, the bet that you're making with an adjustable rate mortgage is that interest rates will be lower when the fixed period is up, and then you'll just adjust to the lower rate and potentially even have the opportunity to refinance at that time to lock in that lower rate for that 20, 25, 30-year mortgage if you wanted to. Thank you for listening to this episode of the Money Minute. If you enjoyed it, please subscribe to be notified when more podcasts are released.
Securities offered only by duly registered individuals through Madison Avenue Securities, LLC, MAS, member FINRA, SIPC. Investment advisory products and services made available through AE Wealth Management, LLC, AEWM, a registered investment advisor. MAS and Conservative Financial Solutions are not affiliated companies. Insurance products are offered through the insurance business Conservative Financial Solutions. AEWM does not offer insurance products. The insurance products offered by Conservative Financial Solutions are not subject to investment advisory requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, time, income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Conservative Financial Solutions is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Conservative Financial Solutions.